Okay, so this past weekend was Memorial Day, the unofficial first weekend of the summer, and for most traders in most years that means there's a good chance that volatility is going to drop, especially in late July and early August when lots of traders are on vacation and chilling out. And if you're like most day traders, you get frustrated during these times because it's very hard to find stocks that will trade cleanly and with enough movement to have strong trading days. More likely, you can experience frustrating days where you get chopped out of trades, frustrated by algos, and basically expending a lot of effort with little, if anything, to show for it. In other words, when volatility is dropped out of the market, how can you make money trading? Well, the good news is that there's a trading style that performs best when the market isn't moving. Now, that may be counterintuitive, but there actually is a trading style which thrives when the market's not moving at all. So if you're interested in learning a trading style that has a very high probability of turning a profit while you're struggling to find stocks that are moving enough for you to day trade them, in other words, if you'd like to learn how to make money while the market is basically dead, then you're going to want to watch this video. Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and right here in our offices in New York City. Now, you're going to want to click our subscribe button right now so that you don't miss any of our free trading videos produced for the trading and investing community. Now, in this video, we're going to be talking about an options trading style known as options income trading, which we think is the best way for you to normalize and balance your trading profits throughout the year. If you'd like to learn a trading style that will almost certainly make money at the very times that you're struggling to make profits on day and swing trades, then we think this video will help. And if you'd like to learn 3 real-world option strategies that our traders use, including the surprisingly simple and powerful strategy that some of the greatest investors in the world, like Warren Buffett, use all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an options strategy that you can employ with the stock that you like, where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage, then you should check out the free options class that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of this screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. It's an extremely rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this video online workshop. So click the link to sign up now and don't miss it. Okay, so let's dive into a little more detail here. We've already established that the most frequent complaint among day traders is that they really struggle to make money in slow market times, but there's something called options income trading that does well during that very same time. Now, you may be asking yourself, how can I simultaneously day trade yet incorporate a completely new trading style into my arsenal of trades? Let's examine that. Most day traders will tell you that their most profitable trades are made during the first hour of the market and the last hour of the market. That's the time that you got to be laser focused on your day trades in order to take advantage of the best opportunity. Well, here's the good news. Options income trades are actually best initiated and managed during the off hours in the market, those hours between the first hour and the final hour of trading. In fact, many options income traders refuse to trade at all during those hours because options pricing is usually less favorable during the opening drive and the final hour. So for technical reasons, options income trades can almost always be managed while you're inactive as a day trader. So it's kind of a perfect complement to a day trading practice. Not only is options income trading the most successful when the market moves, but it's also easily incorporated into your trading practice because the trades are managed when you're less engaged in your day and swing trading. But most importantly, options income trading acts as a great balance to your day trading practice because it will normally perform exceptionally well during calm periods of the market, like those which usually appear in the summer at one stretch or another. Now, there are hundreds of strategies that you could implement using the options income trading style, but there are certain ones designed so they only need to be managed literally once a day, usually in the afternoon at some point. That way, you can maintain an active day trading practice while your options income trade is operating in the background, only needing to be checked, say, once a day to make sure that the trade is remaining within the risk management standards of that particular trade. So one thing you need to know before we jump into an example is that there is more to options than call and put options on stocks. You can also trade options on indexes like the S&P 500 or the NASDAQ 100, as well as many other indexes. Also, it's important to understand that when you trade options, you can be long those options or you can be short those options. When you're long those options, you're paying a premium to the seller of the option, and when you're short options, you get the premium that the buyer pays to you. So with index options, it's a lot more like a pure bet. If you buy an index call and the market goes above the call price, then the seller of one option owes the buyer $100 for each point above the strike. Similar for puts, if the market goes below the strike price of the put, then the seller of one put option owes the buyer of that option $100 for each point below the strike price of the option. But if the market stays below the strike price of the call or above the strike price of the put, then the option just expires worthless. In either case, the seller of the option wins the bet and pays nothing to the buyer. So let's take a look at an example, and I think this will become clear to you. So there's an options income strategy which is known as the iron condor, which can be traded in lots of different ways, but there is one approach that's very simple and was designed to be checked once a day over the life of the trade, sometime between 2 and 3 in the afternoon. Most days, there will be absolutely nothing to do, and you'll just go back and focus on the rest of your trades. On those few occasions where you're going to have to take some action, that action can be executed readily, usually within 10 or 15 minutes, and then you're done, and you can concentrate on the rest of your active trades. So let's look at a simple example of that iron condor trade. So in this condor, on a real index with real historical data, by the way, on this day, the index was trading at 1,114. Now what we did here was we took half of the capital that we're going to use in this trade, and we sold the 1210 call and received $1,900 for it. We bought the 1230 call and paid $930 for it, resulting in $970 of cash flow into our account for the call side of the trade. On the put side, we sold the 1010 put and received $8,150, and we bought the 990 put and paid $6,100 for it. So all of that combined produced a total of $3,020 when we consider everything we received and everything we paid for. So that's how much cash we received in our account for this transaction. Next, we do nothing at all for 2 full weeks according to this protocol, and at that point we add the second half of our capital in, reproducing that same condor, selling another 10-lot iron condor at the same strikes. But this time we're going to get paid a little bit more just because the market's moved around and the options have changed prices as a result. So for the first half of our capital, as I mentioned, we received $3,020 into our account. And for the second half of our capital, we actually received $4,450 in cash, a little bit more in this example, for a total of $7,470 of income once all of our capital has been dedicated. So to review, there's been $7,470 received. We've done 2 transactions in 14 days, and now we do absolutely nothing for another 28 days until we're 42 days into the trade. At this point, we close the put side of the trade as a risk management procedure to close off any risk on that side of the transaction for a very cheap price, $40. That's excellent risk management that all experienced options traders would employ. And then finally, we skip to when the options expire and we've earned, other than the $40 we spent to close the put side, almost the entire $7,470 that we got in for the trade in the first place. Why? Because the only 2 remaining parts of the trade, the 1210 calls and the 1230 calls, have no value on the final day of the trade. They expire worthless because according to the definition of an index call contract, unless the market had closed above 1210, neither of the calls would have had any value. So the call options that we were short and the call options that we were long, they just all expire with no value, and you get to keep about $7,400 as your profit. So if you were paying close attention, you'd realize that we had just 3 transactions over 56 days, all done in the mid-afternoon and with a minimum of effort. We didn't even have to actually close the trade as the options just expired. So you can see that this is a very doable practice to execute alongside your day or swing trading. In this example, as long as the market had stayed relatively quiet and remained between 12.10 and 10.10, all of the options were going to expire worthless on expiration day. So during a period of quiet, as often happens in the summer, this kind of trade will do great, while you may be struggling with your day trading. So you can end up having a solid month even though your day trading was not particularly strong. This is the beauty of balancing your day trading with options income trading. It balances your portfolio of trades to be able to excel in times of high volatility and times of low volatility. So if you take one thing away from this video, I'd like you to understand and accept that there is a way to make good money trading while the market is dead, the very times that day trading is much more of a challenge. And that's called options income trading. These types of trades are not that hard to master and very simple to initiate and manage. Certain trading styles just don't need a lot of management. Once a day will do it, in most cases, once you get the hang of it. Yet the return potentials are outstanding if you develop the skills and understanding to manage and initiate these trades. And that's why we've got a trading desk exclusively dedicated to options income trading here at SMB. And just to remind you, if you'd like to learn 3 more real-world option strategies that our traders use, including the surprisingly simple and powerful strategy that some of the greatest investors in the world, like Warren Buffett, use all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage, then you should check out the free options class that we're currently running. So just go ahead and click the link that should be appearing now at the top right corner of your screen. That will open the free registration page in a new window, so don't worry, you won't lose this video. It's an extremely rare opportunity for retail traders and investors to learn directly from Wall Street traders, but that's exactly what you'll be getting through this free online workshop. So click the link to sign up now and don't miss it. Now, one more thing I'd like you to do is go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading and investing community. And while you're at it, please add your feedback in the comments section for what videos you'd like us to produce next, as well as what you found helpful in this video. So from all of us here at SMB, trade well.